Ondas Inc. closed the last trading session on Friday, May 8, 2026, at $9.06 per share, marking a solid intraday gain of 2.02%. While the broader markets were chewing through standard volatility, Ondas managed to carve out a green finish, bouncing off a session low of $8.65 to reach as high as $9.09 before the final bell. After-hours activity showed a slight cooling off, with the price drifting down to approximately $9.02, but the primary story remains the momentum built during the regular session. It is a fascinating spot for a company that has spent the last year transforming from a niche wireless player into a diversified heavyweight in autonomous systems and defense technology. The immediate reaction most people have to this price action is that the market is finally rewarding the company for its massive backlog growth, but the reality is much more nuanced and frankly more urgent for anyone watching the tape. While the surface-level narrative is about drone sales and wireless contracts, the real driver behind the scenes right now is a massive tug-of-war between institutional accumulation and retail dilution fears. Just this week, we saw the company file a prospectus supplement to register shares related to their Worldview acquisition. Most investors see a filing like that and immediately think of a sell-off, but if you look at the volume during the May 8th session, over 34 million shares traded, it's clear that the liquidity is being swallowed up by buyers who are looking past the short-term noise toward the Q1 earnings report scheduled for May 14. There is a common belief that Ondas is just another speculative small-cap drone play that will keep coming back to the well for more capital, but the recent $10 million order for the Israel demining initiative suggests the science project phase of the company is dead. We are now seeing the transition into a high-scale defense contractor. When you look at the numbers, management has essentially dared the market to doubt them by raising the full-year 2026 revenue target to at least $375 million. For a company that was doing a fraction of that just 2 years ago, that kind of guidance is a bold move. It creates a massive amount of tension, because if they hit that $38 to $40 million range for Q1, the current $9 price point might look like a gift in retrospect. However, if they miss, the 34% short interest is waiting to pounce. Watching the daily swings, it is obvious that institutional activity is picking up. We've seen names like Vanguard and Renaissance Technologies holding positions, which provides a layer of professional validation that many other stocks in this sector lack. When you use a platform like Interactive Brokers or the Fidelity trading platform to analyze the order flow, you can see that the sell the news crowd on the dilution front is being met with significant buy the dip demand. This is often where the most interesting opportunities lie, when the common ground is fear of share issuance, but the deeper analysis shows a company that is finally scaling its revenue to match its ambitions. The technical setup for Ondas stock right now is hitting a critical juncture. After a 16% gain in April, May has started with a bit of a reset as the market digests the Mistral merger and the 1.2 billion authorized share increase. It is easy to get spooked by the authorized share count, but savvy players in individual brokerage accounts know that authorized doesn't always mean immediately issued. It means ammunition for more acquisitions like the ones we saw in the first quarter. If you are using investing sites to track the sentiment, you'll see a lot of chatter about the Worldview deal, but the real meat is in the pro forma backlog, which has ballooned to over $450 million. That's the kind of visibility that moves the needle for long-term holders. For those of you managing your own portfolios through self-investing or using the Robinhood app for quick executions, the intraday movement on Friday was a classic example of a stock finding its floor. The way it climbed back from $8.65 suggests that the $8.5 to $8.8 range is becoming a zone of high interest for buyers. If you're looking for investment help or using a SoFi robo-advisor, you're likely seeing this volatility as a standard risk of the defense tech sector, but the volatility here is actually lower than it was 6 months ago. The business is maturing. The inclusion of Brigadier General Oshri Lugassy as co-CEO of Ondas Autonomous Systems was a strategic masterstroke that hasn't fully been priced in by the retail crowd yet. It signals to the market that Ondas isn't just selling hardware, they are selling battlefield-proven solutions. Beyond the ticker symbols in the daily green or red bars, the business model at Ondas is shifting towards a system-as-a-service approach. This is why the Palantir partnership is so critical. They aren't just flying drones, they are integrating them into a massive data ecosystem. By using Palantir's AIP capabilities, they are moving away from being a hardware company and towards being a software-heavy intelligence provider. This is where the real margin expansion happens. While everyone else is focused on the cost of building a drone, the smart money is looking at the recurring revenue from the data those drones collect and process. Comment below how many shares of Ondas you currently hold, or if you think the recent merger with Mistral was the right move for their balance sheet. Looking at the broader landscape of online investing, people often compare Ondas to the giants like Tesla stock or Nvidia stock, but the reality is that Ondas operates in a much more specialized, mission-critical environment. Their full-max software-defined radio platform is becoming a standard for the rail and energy industries. This creates a defensive mode that is hard to cross. It isn't just about the cool factor of drones, it's about the boring, essential communications infrastructure that allows those drones and other autonomous systems to function in high-stakes environments. If you're checking your Fidelity IRAs or your Robinhood investments, you have to ask yourself if you're positioned for the modernization of warfare theme that is dominating the current defense cycle. The financial health of the company has seen a drastic change. Entering 2026 with roughly $1.5 billion in pro forma cash gives them a level of durability that most of their competitors simply don't have. This cash pile is a double-edged sword for the stock price in the short term, because it usually comes from the very dilution that traders fear, but for the long-term outlook, it removes the bankruptcy risk from the table. It allows management to focus on reaching that adjusted EBIT to profitability target they've set for late 2027. When you're using SoFi Invest or checking the Robinhood crypto and stock sections, you see a lot of companies with high growth but no cash. Ondas has managed to secure the cash to fuel that growth. Institutional activity in the last session showed that while the retail sentiment was mixed due to the share registration filings, the high-volume buying at the end of the day suggests that the big players are positioning themselves ahead of next week's earnings. If we see a beat on that $39 million revenue estimate, the narrative will shift from how much dilution is coming to how fast can they grow. The sector momentum is also working in their favor. With defense budgets expanding globally and the push for domestic drone manufacturing in the US, Ondas is sitting in the right spot at the right time. For anyone using the Fidelity mobile app or the Robinhood trading platform to keep tabs on their positions, the next few days will be telling. We are seeing a consolidation pattern after a massive run. The tension between the expectation of further dilution and the reality of a 640% year-over-year revenue growth is what is keeping the stock so active. Most people look at a $9 stock and see a penny stock mentality, but with a market cap over $4 billion, this is a serious mid-cap contender that is starting to demand institutional respect. Looking at the future outlook, the catalysts are lining up. We have the Q1 earnings on May 14, the ongoing integration of the 5 recent acquisitions, and the potential for new government contracts in the Middle East and Europe. Each of these events serves as a potential trigger to resolve the tension between the skeptics and the believers. The risks remain. Operational burn is still a factor, and the integration of multiple companies at once is never easy, but the reward side of the equation is starting to look much more substantial as the backlog converts to recognized revenue. Expectations for Ondas were once quite low, centered on whether they could survive the R&D phase. The reality of 2026 is a company that has not only survived, but has aggressively consolidated the autonomous defense space. As they move toward product-level profitability by the third quarter of this year, the focus will likely shift from capital raising to execution. If you are involved in self-investing or use specific investing sites to guide your decisions, the data suggests that the execution phase is where the most significant valuation re-ratings happen. In the end, the Friday close at $9.06 reflects a market that is cautiously optimistic, but still looking for that final confirmation from the upcoming quarterly report. The contrast between the broad market narrative of a dilutive small cap and the reality of a diversified defense leader with a $500 million backlog is the gap where the opportunity lives. Whether you are using a Fidelity brokerage account or managing things through the SoFi active investing platform, the key is to look past the intraday noise and see the structural transformation occurring within the company. The authority of Ondas in the private wireless and autonomous drone sectors is becoming harder to ignore, and as the year progresses, the results will likely speak louder than any prospectus supplement ever could. The central insight here is that the market is currently pricing in the fear of the next share sale rather than the next big contract, despite the evidence that the contracts are now significantly larger than the capital needs. This mismatch between expectation and reality is exactly what creates volatility, but it also provides the entry points for those who have done the deeper work. As we head into the next trading week, keep a close eye on that $9 level. If it holds through the pre-earnings jitters, it could set the stage for a very interesting second half of May. Authority in this market isn't given, it's earned through quarterly execution, and Ondas is about to step up to the plate. Keep your eyes on the volume, stay focused on the revenue conversion from the backlog, and always keep an eye on how the institutional players are moving their chips before the big announcements hit the tape. This is a high-stakes game, but for those who understand the shift in defense technology, it is one of the most compelling stories on the Nasdaq right now. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.